What's going on, guys? It's the live financial modeling stream, SmartHelping.com here. We're going to continue on this traffic-based SaaS model. So far, we've done 3 integrations. The franchisor licensing one, which was the last template I actually did, so I just did the integration on that one first. And then we're starting from the most popular templates going down, which if you look here, uh, SaaS, equipment rental, and then now we're on this website, ad recurring revenue. Next will be car wash. Car wash model. This is the 3 statement model I'm using to do these integrations with. Product as a service. This one's going to be pretty intense. Freemium, general mobile app. This is different. This is one of the first. The general mobile app is the first template I did for SaaS where I did cohorts of for retention. I did matrix logic, which is more accurate. It's more advanced. So that'll be a good one. Professional services firm, yeah, and then we'll work our way down from there on these. It's going to take, 5 or 6 months to get through this. Before I get into it, thanks for all the members for the support. Also, if you want to support for free, check out or subscribe to the channel. Like the video. If you want to check out SmartHelping.com, I've got hundreds of templates there, and not just startup models, but also a lot of tracking tools, a lot of joint venture waterfall stuff. And a lot of this, if you were wondering, I started on Upwork 2015, and I just started taking every single job I could, tried to learn as much as I could, and just built things for people in Excel and Google Sheets. And then I started doing templates in 2016, and I've grown from there, just finding out what people find useful and trying to build it um, is make the best version of that possible. So having said that, this template's got a new feature that I'm adding on the global control tab, and I don't change this up much. Now this is an older template, so I have some sensitivity drivers here which we'll keep. But what we've added is and it's simple. It sounds simple, but it's actually going to make the model a lot easier to determine timing assumptions. So we've separated out exit end month with include terminal value or not. Before, there was just either an exit month or you could choose NA, and then just from that, I would have to try to make logic to figure out if to make all the exit proceeds and everything work or turn off or on based on that, and it was not as um, it was just made it harder to do these, especially with the 3 statement model. Now with this yes or no selector, and then having the end month separate, this is great because now you can pick any end month, doesn't matter what month it is, that will stop the model on that month. And then if yes is selected, it will do, close out all the fixed assets, do gains or losses on that, show up correctly on the balance sheet, um, flow through for the taxes. Obviously, it will include the exit proceeds, include the building, sale of the building at whatever value is put in there, if there is a building, and it will reduce the possible ways that you can break this, which is what we're trying to do. And the idea is you can change anything in light yellow, and the model will just spit out the right numbers and it won't break. Keep in mind, I do have an entire SaaS bundle of all the SaaS models I've done to date. Enterprise SaaS, this one allows you to do different contract values for, let's say you have um, your customers are doing millions of dollars, not like $2, and it's low customer, high value, and different contract lengths, and you need to track retention over time and renewals, and also change in value per renewal. And so this is enterprise SaaS has got all of that complexity in it. And then there's just a lot of different. The standard SaaS is the first one we did, first one we integrated. Um, this is the one we're doing now. security alarm services, lending as a service, platform, marketplace, ad network. Ad network, I was very surprised. This was actually not as popular. I've only sold, I think, one of these, but this is to do a two-sided, essentially marketplace to figure out ad revenue for something like Google AdWords, Bing. I don't know what they call their thing, Bing AdWords. Um, and it doesn't have to be online; it could be offline too, like billboards and all that kind of thing. Also, this rolling revenue forecaster and this customer curve retention model, these two were standalone templates that are very useful as well for any SaaS business. Okay, well, I promoted all this crap enough. Let's get into the model. So I did the income statement. I didn't stream yesterday. I needed a little break. But the day before that, I completed the income statement portion of this, most of it. We're going to have to do some things and check on the taxes down once we get more into um, get through the other statements. And with three statement modeling is really like a puzzle. So I always start on the income statement, fill that out as much as I can. Then I go over to the balance sheet, and then I usually realize, oh wait, the first item is cash, and that's cash flow statement. So then I go over the cash flow statement and start there, and I just do each line as I can, and then go because different lines match with different parts of the financial statement. So it's like a puzzle. It's very satisfying when you complete it, and it usually takes a while, and it can be pretty frustrating. But that's why I'm using a template. This will reduce a lot of errors because it's already got all the logic. I just have to make sure it's mapping to the right references and then just integrate it with what's already going on in the model or in the base model of this. So right now I'm just formatting this so I don't have to think about it later. I do all columns at width 15, freeze right below the date. And I remove grid lines on every tab as well so it looks nice and clean. We won't have inventory in this model because it's a SaaS recurring revenue business, and it's not like anything with inventory that you're reselling. Now, no, any business could have almost any kind of financial line item, like it's an item on the balance sheet, but the main way that this business makes money has anything to do with buying and selling inventory. So I'm not including it because it would not fit like 99% of the cases. These we can all delete. We're not using these. I just need them for the initial copy and paste part of the putting the main three-step model into here, so it didn't have an error when I went find replace. Right. So we'll start on the cash flow statement and try to do all those items. That's going to be based on our monthly P&L detail. That's already part of the base model that's been out for years. Okay. So again, no inventory. Don't need to worry about that. Taxes was fine. Interest, okay. Yep. So we're gonna go. Customer receipts is total revenue. And for this, actually we can reference the income statement for this. It's total MRR. Other OPEX is going to be, and once I finish all of the logic here, I have like 6 or 7 checks that will look at um, making sure the balance sheet's always balanced. It'll check the revenue and profits and make sure the three statement model is completely synced up uh, with the monthly and annual P&L details, so that there's no errors. And the most important takeaways if you're looking at this as a potential modeler is you have to put in checks. It will save you a lot. And once you start charging a lot of money for this stuff, you need to be accurate. And so putting in checks is very important. Okay, cash flow statement. Whoa, we lagged there. Lagged a lot. Hold on. Undo. Income statement. Okay, other OPEX is simply going to be all of this. Operating expenses and plus cost of goods sold. I don't think I'm separating that out. No. And then interest based on our amortization schedule and taxes. Now we're not getting crazy with the taxes. Like we know obviously you pay taxes in the year after you accrue the taxes. And you could do some stuff there with accrued liabilities and repayment or when that's paid like in the next year every quarter and that's like the cash reconciliation. But taxes are going to be so arbitrary anyway. It's just the main thing I'm trying to do is show if you look at the total cash flow of the entire model, there's going to be some taxes that are going to have to be paid if you're profitable. And if you don't want to show that, then you could just zero out the tax rate and then it just will not be in there. All right, did we start a column earlier? Column C? No. Why is the last year? What happened in the last year here? Oh, I think I put this to the, so I don't want to do this test yet. Let's set the end year to the very last month of the model for now, or last month of the 5-year period. Make sure, okay. So make sure this is coming through. Okay, good. Yep, income statement. All right, awesome. If you have never seen a statement of cash flows, it's essentially breaking everything up into 3 categories. And this is, if you go into accounting, you'll hear about these 3 categories all the time. And there's a lot of variance in what can be considered what, like how you justify something being in one category over the other. What I'm doing here is pretty straightforward and not that subjective. So we've obviously got cash flow from operating activities is essentially the business running all the business related expenses, taxes and interest related to that, and then all the revenue earned from customers. So that's the first section, operating activities. Second is from investing activities. And for here, for just like the off the shelf model, I just have capex, which is fixed assets. The potential sale of the business is in here, and sale of depreciable assets or sale of fixed assets. And once, obviously, if you sell, you kind of close the books, but this is where we want to match so that all that's left on the balance sheet is basically cash and equity. So that's as far as we're going to go on this for the purpose of just an off-the-shelf 3-statement model. And then the last one is cash flow from financing activities. This is debt, essentially debt repayment, stock, dividends. Now, not dividends we're not going to do. We're just going to have a sale of stock, which is based on the cap table. Principal payments is based on the amortization schedule and as well as long-term debt. And then after you add up all those, you get the net change in cash. And now this should match what we've already done here on the monthly detail. However, I am going to have to add some rows. I have to do that. I made a note. I'll have to add some rows for things that I don't have here, which would be, let's see, did we include, let me look at the executive summary. This just shows EBITDA. These are advanced SaaS metrics. Did I even have an exit value here? I might not have, so I'll have to add exit proceeds, debt repayment. So some of the other things, that's just part of cleaning up these older models and adding a bit more functionality. Okay, so where was I? Cash flow statement. We've got all of this. So capital expenditure. We have logic in here. Some of CapEx C18. That looks good. Let me just double check. So we've only got 20,000. I need to adjust the date. 2022, 23. And note, when you use these models, one small issue I've seen people have is they'll just put in a date and then try to drag it down. You can't do that because it's based on, then you're going to be off by a month. This always needs to be the first of each month you're picking. So that means you have to just select it by the drop down, or if you just want to stagger it, if you want to keep it the same, if you want all these in February, you highlight both the ones that are 2121, drag it down, and then Excel knows to put them all at 2-1. But if you just take one, watch what happens. Now see 2-2, 2-3. You don't want that. And that's something with all my templates that you should know when you're inputting dates. Okay, I want to stagger this just to make sure the logic is working right. All right, let's go back over to cash flow. It should be, now we should see a total of, hold on, let's get all this formatted here, boxed in. Okay, so we should see 5.182 million coming through. All right, here's that. And that will all set up depreciation and accumulated depreciation on the balance sheets. 5.182. Okay, so we've caught everything. So this looks good. Now, sale of the business. This is where we're going to have to do some finessing on the logic and add logic. So number one, we're going to have to figure out the trailing 12-month revenue based on any month being the exit month. So that's, and I have that logic built in the newer template, so I'm going to have to go there. So terminal value C6D9 of this. So C6 is, wait, revenue multiple. Year. Uh, Let me make sure. If D5 equals, global control C6, which is the end month, and I know that's right, then we want terminal value D9. So terminal value D9 is what we got to build first. And this also needs, so we're going to have to do this one. D9 is the extraordinary income. So for this, I've split out the total valuation, exit proceeds, if there is an exit. You can assign a percentage of that to be applied to fixed assets, and it's just going to affect taxes. So let's see. So we also need, this is where the new logic is going to start to come in with the yes, no, and exit proceeds. All right, annualized revenue in year of sale. This is going to be changed to 12-month trailing revenue, which will include the end month. And we need a tracker. So this tracks just if it's an active month or not. But we want trailing 12 month. And in that case, we only want to say, so trailing 12 month. We want to say if this is greater than or equal to our exit month minus 11 months. Comma minus 11. So if it's greater than or equal to that, and if C5, which is the date, is less than or equal to the actual end month, then 1. Oh, bracket, then 1, otherwise 0. And now we should be able to have a situation where it only puts a 1 if it's in the trailing 12 month, and we could just sum up the revenue based on that marker, and we're good to go. So let's see if I did that right. We should see only a 1 in the last 12 months. Looks good. Let's make it a different end month to make sure it still works. Yep, look at that. So June 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Awesome. So that's the trailing 12 month reference we have. A lot of modeling is just about also how well you can reference things and create references dynamically. So it's simple. We go terminal value. Now look at this. This is so cool. If global control to include terminal value equals yes, then simply sum ifs income statement total revenue, and look at this. All you have to do is sum that if our reference equals 1. That simple. So that's the 12-month trailing revenue. Our revenue multiple, which we're going to actually define that on the global control. Right there, run rate multiple. 12-month trailing run rate multiple. And this is not input anymore, it's referencing the control tab. Nope. So we have that, and then the valuation is just those two multiplied together. And then percentage that goes into the extraordinary income versus capex, and then also we have net proceeds from the sale of the building if there is anything entered in that. Now what I can also do, and I'm trying to hit all the main inputs for our yes no logic, which is very important too, and this is why this is going to be so nice. So we want to zero all this out if a no is entered, even the billing, which we might have to actually do since this is a hard-coded input. we'll have to find the secondary reference to this and make sure that zeroes out. But for here, let me see where's where's the best way to control this. So this has to zero out if this equals no, then 0. Otherwise, take the value, and that's all we have to do is put that in front of each of these formulas. It's very nice. And all I'm trying to do is say check if check if we're going to include a terminal value. If we're not, then all this has to zero out, because if you don't do an exit proceed, it means you're just going to show the business operations over time, and in the balance sheet should just show the value of everything at the end month and not clear it out. Okay, so this will go to 0. Let me put it as no to make sure it's working. I don't think this is used, but I'm going to put it in here anyway, just to be safe. And this is 0 because terminal value D10 should be 0 because we're zeroing out all that stuff. And I got to put a otherwise 0 here too, so we don't get any errors. And this as well. And then in front of here and here. Okay. And now let's turn it back on to make sure I didn't break any of those formulas. That looks good. What was this? 43,934. Let me undo real quick. 43, perfect. Okay, so nothing changed. Good. So if we say no, all that goes to 0. What else can I reference to 0? Well, let's go. Okay, so let's go back to where we started this whole thing on the cash flow statement and sale to business. So D5. So let's go over here. Exit June. We are pulling in the exit value and sale depreciation. That's for 6 million, which is including the building. 6159, 322, 6159, and then the part for fixed assets. Or sorry, the terminal value is 322, and then this is 6159. So that all looks good. Looks like we're matching up there. Oh man, this is gonna create so much less headaches by having this stopper there, or the yes no selector on terminal value. Exit value. Obviously, that's only going to populate if there's a terminal value. It'll be this number here. And this is 12-month trailing revenue from exit end month multiplied by the run rate multiple. All right, we're cruising along here. So we have income statement done, cash flow statement. That looks not good. What happened there? Okay, we'll figure that out in a second. I want to see if I hit no here, if this flowed or flow through. Let's see. So no, so this, okay, this one here. So this is our next row. So our sales business is good. That will work. Sale depreciable assets, we have to do if and what do we have here? If and D5 equals exit. And see, we don't need this anymore. All I have to do is say this. So see how complicated that formula is right now with the if and all that stuff. Now we simply go if this equals yes, then pull. Watch this, so easy. Sum of this column. Otherwise zero. Oh, and we have to check if the date matches. So we do have an if and here, but it's a much more simple if and. And just if this equals our exit month. My goal is to do a full integration in 1.5 streams. If I can do that, we are all set. I mean, that'd be awesome. Make sure this is the same as what was going on here. So this is going Terminal Valley D10 CapEx H3. D10 H3. So D10 is remaining for CapEx. And then H3 is that, yeah, so that's just this total here when there is a value. Because this is being, this, you can see terminal ID 10. It's just taking the proportion for each one. Perfect. Okay, let's drag that over. Got everything locked. Oh, yep. H's are locked. That's locked. Good to go. Drag it over. And now we zero out, which we should be because we're not including an exit. By the way, as far as the whole COVID recovery and everything and energy levels, I feel like I'm 97%, I guess I would say, almost 100% back. Thank goodness. That was horrible. All right, so we're only half an hour in. We're making really good progress today. Cash flow from operating, so this is done. All set with the new logic. Borrowing of long-term debt. What am I doing here? If D5 is greater than, oh yeah, so that's checking if it's past that, whatever, that's fine. If it equals debt schedule B7, then pull in the amount. And let's put this to the current date. That does not need to be bold. And oh, let's make this logic so you can do different payments per year and it works. So B, forget, B7 divided by 12, I think it is. Or B6. So if it's 12, it'd be every month. If it's every 6 months or 6 payments a year, we should have 6. Oh, well, nope, did not do that right. B, so it's 12 divided by B6. 1, 2, 3, 4, 5, 6, and then next year 1, 2, 3, 4, 5, 6. Perfect. There we go. And if it's like 2 payments a year, 1, 2, 1, 2. Okay, make sure that's dynamic. Now we will have to check if, oh, here's another great place where this selector, yes, no selector is going to work wonders. So we could do if this equals no, then 0. Otherwise, we pull the exit month, and on that month, we want to pay back the balance. So let me put this to yes just so I can see. Format it. And then this formula, we just do a real simple if our date here equals this exit month, then we just take the payment's going to be the previous principal balance plus the interest rate for that period divided by 12 times the previous balance. Otherwise, just do what we already had in there. And then we got to lock 7. So this should give us equal payments until the exit month. In this case is June. Put a note in there. Exit month. And voila. June 2026. We have, let's format all these actually differently. We have the payment and the loans, or it's done. Man, this is so nice. That yes no selector is literally a lifesaver. So we're good there. And if we put no, it'll just run into perpetuity to the end of the model. So that's in sale of company stock is going to be real simple. It's just going to equal cap table this total amount, which is going to be the minimum equity required from investors. That's what the model actually solved. That's the main solve that the model does. And that will always be month 1. And there's our net cash flow. From finance activities, and here's the total net. Now this includes everything. Let's go over here and make sure this makes sense. On our exit month. Yep, That looks great. So 9,181,000 should equal this total plus the building. Yep. All right. CapEx is fine. Next is going to be the hardest part, which is a balance sheet. That's always a trick to figure out. Um, and I think we're ready for the balance sheet. You know what? Let me check one thing with the taxes here. Oh, I wanted to see why there was a cash flow statement, why that was all messed up on the last month as well. What in the world is going on here? Okay, the taxes. Also, income statement. Why is this an error in 18? Okay, these should be 0. We always want to solve for or 0 if yeah, this has to be 0, not blank. 0. Blanks cause errors in models, so try not to ever have something be blank on the okay, on the default. I think we're good. So this one, that's good. Yeah, see this? We don't want errors or blank. This too, man. 0. I'm gonna have to look on the base 3 statement model, and we'll also change all that to blanks, or I mean, make it if error is 0 instead of blank. That will reduce any other operation error that we see in the formulas. All right, let me drag these over here. Oh. Now, the percentage is not a big deal because that's not flowing anywhere else, so it can stay how it is. All right, back to cash flow. So here, okay, there's an issue with the tax formula because it's saying it's 4.9 trillion. So let's go over to this calculation right here. So it must be something with our references. We might have changed something. Taxable income, that looks good. And then this is based on, so what? Let's look at this. Actually, let's see if the annual has, No, the annual taxable income looks fine. So it's an issue with the multiple. Oh, and I know exactly what it is. So we got to change the rates. So it was like 9 and 10 or something. Now the taxes are in 37, 38. So I know exactly what's going on there. We'll come into this. What did I say? 39, 38? Why did I say them in that order though? Hold on. 37, 38. 37, 38. Just to separate tax on fixed asset gains versus the just ordinary income from business. And again, you can zero out the tax if you don't want it to show in here, which there's a lot of reasons why you might not want to. So again, it wouldn't cause an issue if you did that. So C9 is 37 and C10 is 38. Okay, and that makes sense. 200,000. Or for the year, 973. Let's make sure that maps to the annual. Hold on, what? 1.791. Oh wait, I didn't get them all. Oh, hold on, hold on. So here we also need to do, see this if blank crap. We gotta put if our date is greater than global control this, then 0. Now I'm hoping also by making all this all the integration work more streamlined, it will also make it easier to follow along because I'll just be doing more of calculations and logic instead of a bunch of formatting stuff. All right, if this, why is that even there? All right. Oh, now we should match up. Yeah, 973,000. 973. Also, let's just for the sake of visuals and optics, let's put the base revenue. I just want to raise this up. Let's put this at 80, 20, 30. I just want to see profits earlier in the model, just for the sake of the visuals. All right, so now there should be, well, the exit value went up a bit, but we should see profit coming up sooner. Okay, by year 2, or yeah, year 2. And by year 3, we're actually profitable. That's a little bit better. Okay, good. So we fixed the tax calculation. Now that should flow over. We should be, and this is all just to get our cash flow statement to match 100%. Looks good now. Go to the cash flow statement annual, just make sure. So this, let's see, we don't need this row. And keep in mind at the end, I will go up and clean up all the blank rows I've taken out and format everything nice and neat. All right, income statement monthly, or no. I need to now, we can't do the cap table till we get a proper cash flow on the monthly and annual detail. So I did this. Let's look at what we have here. Leverage and unlevered cash flow, it's not really that relevant. So we've got debt service. Oh, cash from exit. Okay, in this, now I can just simply reference um, sale of business right there. And we'll do sale of business and sale of fixed assets. All right, looks nice. And then we also want, let's see, did I do a CapEx? I don't think I did a CapEx schedule here, which is fine because we've added that in. Yeah, we just have startup costs. Okay, so CapEx, we're going to reference the cash flow statement again. And this is actually very important so we don't have a circular reference error in our calculation because we're going to find the min cash position, and then that's going to drive our equity that we have to raise, and that's going to flow to the balance sheet. And this is the cleanest way to do that. Oh, also our loan payback. If this equals, because this has to match this logic, so if that equals our exit month, then pull let's see, principal payments, this. And I need to make sure, let's put the CapEx one in here too. I need to make sure that doesn't double count the debt service for that month. So I'll check that as well. What am I, oh, CapEx. So 92,295. Let's go to the amortization schedule and see if that includes principal or not for that period. I think it does, which means we'll have to subtract this out in our actual balance. So 92,294 is the principal. Okay, good. So that's just including, and the interest is separate. So my question is, if I look at the total interest and principal, does this match my other schedule? So 119,495, 119,495, and that should equal Oh, wait, this already has it in here. So I don't need, so this loan payback is actually already in our schedule. And let's make sure that equals what I just calculated. 119,495, 119,495, 194. Okay, that's great. So we've added CapEx, sale business, sale fixed assets. Um, and now we can calculate minimum cash position. And I'm just going to do under here cash flow. And this will equal, let me go through here, EBITDA plus that plus this plus this plus this. Oh, I'm going to add taxes, so that'll be a row here. That'll be a negative value plus taxes plus now financing's dynamic. Shoot, how are we gonna do this? I mean, 9 times out of 10 it's gonna be on the first month, but I mean, what if for whatever reason you don't want to start debt for a couple months? Well, so 100,000 comes in on the cash flow in January. We've got it here. All right, we'll add it here. Minus debt service. And then this will be the min equity we need is the min cash position of here after you accumulate it. But don't forget, we need to add in taxes real quick. And this is where if you haven't done these a lot, you will see you probably are going to get circular reference errors until you get good at thinking through everything that's going on. It needs to be a negative value. So this debt financing, we can just reference the cash flow statement, just offset by 1. So if it's here, it'll actually be your 0 on that model. And then going forward, if it's on February, it'd be January here. Actually, so if that's January, it'd come here. If it's February, it should come in February on here. And January on this will never have a value because if it's ever there on the cash flow, it comes in this first month. Otherwise, it's just the same month that it's on the cash flow statement. And the only reason why I'm doing this is because on the 3-statement model, there's no year 0 calculation. It's always the first month or an actual month. All right, here we go. Now this is our equity requirement calculation. Min value, which, wow. So that equity is not actually paid back until the exit, which is quite common. Running unprofitably for a while. I mean, they're still got revenue, which is good. And this is a completely arbitrary. All the assumptions. When you go in and use this, you'd put in all your own numbers. Let me let me just play with the revenue for a second though. Let's erase it up. So let's say our traffic is 5,000 starting, and let's say our conversion rates are a bit higher. Say 4% convert to free. Churn rates are pretty low still. That's fine. Now let's see. What do we look like? All right, that's nice. And if we go over, we almost get to pay. Do we pay back? Yeah, we do. Nice, before the exit. I need to add these all to the annual as well. And this should be in the same order, I'm hoping. Yep. Okay. Do cash flow. And then here's our first check. This ending cash flow should equal the monthly, or else we've missed something. And yeah, we've missed $31 million worth of stuff. So let's see, what could that be? Taxes. So 22 million. Just make sure these match. Yep, 22. Oh, did I not? I gotta update the cash flow calculate. Oh wait, no, this is fine. So minus 130, minus 5, 146. Just see where we're out. Five 304. So about 200,000 off. Let's see, what could that have been? What are we missing in the annual? All that stuff I added is matched up the same. I mean, oh, okay, these are all off. So this needs to be come down 1, 2, it looks like. So everything needs to come down to 1, 2. Wait, no. Okay. We're going to recalculate this here. I don't know why our rows are out, but that's fine. So this plus this plus this plus this plus 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 that. All right, down to 119,000. That's a bit better. We also need to change this. So this is only going to equal the year 0 if we're matched up on that. Otherwise, it's going to be row 327 needs to be summed up. All right, what am I missing? Oh, I guess the debt service. we go. All balanced out. You can see why it's so important to have checks. This is good. Now we come over to our global control and we solve for remaining equity required, which is only going to be negative min of our monthly cash flow. There we go. And if you do know, you have to borrow or get a little bit more if you don't borrow any. Just making sure that worked. Now this number goes to the cap table right here. That's all good. And the cap table, so this, now we should be able to go and look at, well, we haven't even started on the balance sheet yet, so just stand by. We should see a 0 somewhere. We do not, so there's probably something off here. We'll have to figure out what's going on. Yes, this owner's equity. So to be consistent, let me pull up our last one. Let's see, what was that? Equipment rental. And for balance sheet, how did I label these? There we go. And so month 1 is going to equal whatever equities raised. And then we did outside versus insiders. So outside investors and then inside. And then this will simply, as long as this is not greater than the end month, then it's just taking the previous value. Drag down, move over. Now I believe we should see a 0 up top in the cash position. I know that won't affect that. No inventory. Let's see, what else can we update? Retained earnings. So I think we can keep this as it is. Oh, I know. We don't need any of this. D32 and 54. Those are just for dividends, which we're not doing. So it's just equals that. And this plus this. Oop. Oh yeah, we are out. We are out. So it's good we're out because the cash balance didn't go to 0, so there's something odd. Accumulate depreciation. So this is the first big hurdle. First big hurdle. And always, usually income statement, cash flow are pretty self-explanatory. The hardest part is always the balance sheet. Always. And so we're out in the month, or in the first month, 316,000. Now, what could that be? I have no idea. What to look through this. Hmm. So what happens in month one? We have this coming in as equity that will affect the cash flow or cash size. We're spending 5 million on the building. We have some accumulated depreciation. We have depreciation expense, which would hit 8193, the income statement, or 8169. Taking in debt, on debt. What are we out by? Hmm. 116. I don't know if I would see that amount anywhere. Or 316. See, debt service, borrow that, raise that amount, that, cash. This all looks fine. These are the mysteries. What are we out by? Three 174. Is that anywhere? Am I missing that number from somewhere? Hmm. It's odd that it's an even number as well. All right. Well, our assets are. I mean, that's only composed of accumulated depreciation, that building purchase, and the cash. So this is most likely correct. Question is, So then our liabilities and owner's equity. Oh shoot. This. Oh, hold on. We're in the wrong freaking column. Yeah, 100,000. That's right. Although, hold on a second. Why is this going up so much? This looks like our equipment rental schedule. So, what are we doing here? We don't need any of this because we only have one loan, so this is no longer necessary. Oh, what did I do with my... Where's my calculation for the exit? Is that on... Oh, I'm confused. I put the exit, that logic for like the exit month reference. I don't think I did it on here. No. Oh my goodness, I'm on the equipment rental model. Oh my goodness. Don't save. Don't save. How did I get onto that? I must have somehow just clicked. Whew. Okay. Make sure. Did that save? 113. Yeah, I did. What did I mess anything up on here? Let me double check. Okay, yeah, I can't. Gee, mini Christmas. No. No. I cleared out all that logic. That logic needed to be in there for the equipment rental. Um, Good news. I sent this template to somebody, I believe last night, so I can just pull it off that email and re-put it in here. I think that's the only thing I changed on here. Okay, we'll deal with this later. Let me just clear this out. Man, that is scary and frustrating. Anyway, so income statement here, I do have my checkers. Yeah, we're hour and 18 minutes in, and that's already happening, so we got to be careful. Yeah, this looks like the right amounts, so it's nothing to do with that. What could this 316 be? Back to our retained earnings. 157. Yeah. I can't wait to figure out what this is. It's probably something stupid. This is. Let's put this in here just so we can see. See what we're out by on this too. $1,027,000. That's quite a bit to be out by. Yep. And our monthly, we're out that much for 12 months, so that at least we know we're synced up. It's just. And ends up being. Okay. Let's look at what the difference is for month to month. Sometimes that helps. Like how much is it going up by? 54, 60, 61, 62, 63, 64. So what is around, what could be causing around a $50,000, $60,000 difference each time? And actually it goes all the way up to 4 million per month. Let's see, what could that be? This is accumulating, which is right. Man, these are so tricky. 598, let's check this. This is 5058. So, and sometimes it helps to see, okay, where are we calculating? Where are we calculating the monthly for this on this versus the um, financial statements to compare? So this is 558 technically, and we have a cash change of this, and then the difference in theory should be the equity raise. So that's not, we're raising how much? 5340. All right, and this 5,058,000 doesn't include any investor money. This includes all of it. Wait a second. Hold on, hold on, hold on, hold on. So if this were to be 0, we're at 4742. This has, okay, what, okay. Ah, I see. I see, I see. Here's our issue. And look at, okay, oh my goodness, I can't believe this. OPEX has to be a negative value. So I was showing that as a positive impact on cash. Interest has to be a negative value. Same with taxes. Wait, I think taxes already come through as a negative. No, they don't. And that was it. So if you're watching this, it might be cool to see next time I have a problem like that, see if you can solve it before me. But that was it. These OPEX, these items needed to be negative, and obviously cash flow from operations is negative in the first, well, until you start making a profit here. So now let's go. That's going to change everything. Um, where are we? Balance sheet. Oh shoot, we're matched up. Man, see that feeling is so good when that happens. And the balance sheet's really going to make sure you're accurate. I mean, when you have all those things, like that little issue of having the wrong sign of plus instead of a minus, showed up as an issue clear of stay. Now we should be able to get solved to 0. Yep, there it is, to 0. That's good. And You can assume if you want to put like a cushion or a contingency, you can always go to the startup cost and put a reserve here of X amount. And that means technically when your balance sheet hits $0, you'll still have whatever the contingency was. Because it wasn't spent on anything, it was a contingency amount that you counted for the cash, needing that cash. All right. This is awesome. So the integration is technically done, but it's not actually because now I need to do all the tests. So I'm trying to think of the most elegant way to end these on the end month as well. Hmm. I guess I could just say, so for those three, if this is greater than, can, oh, screw it, I'll just reference it right here, then 0. And all we're doing here is just turning the model off after the exit month because there's no point. How did I forget to put the if in there? Oh my goodness. Retained earnings, I'm just going to do it on this one so I don't have to do it twice. Oh, come on. The, what am I doing? If, perfect, okay. So that ends if it's greater than that. Now the trick is here, I want to update this. So this accumulated depreciation, the value of the assets is based on, let's see, if D6 is greater than 0. So that might or might not be greater than 0, but that's not the hard reference anymore. So we need to say if it is greater than 0, then some. We just need to say if and this equals the exit month, and oh man, this is going to make the model so much better. If this equals yes, then we zero everything out. Otherwise, just do what you do. Oh, we got extra parentheses in here. Oh, if and did I not lock it? If that equals this and this equals that, then yes. Value true, value false, sum of that minus that. Oh, hold on, there's a third. What was this third sum for? What's CapEx C? Hold on. Is that just the amount of the purchase? Yeah, so that's just zeroing it out. So there's no need for that crazy complexity in here. We could just more efficiently say it equals 0 or the total value here. And it only is going to go to 0 if it's the end month and terminal value, and we just say yes for including the exit proceeds. I can't tell you how much better this is going to make just the checking and just the functionality of all the timing around exit stuff. It's really going to make it better. So if that's 0 zeroed out, same with this one. What were we doing here? Oh, somebody just bought a template. Nice interest rate swap. I'll have to send that out here right after the stream. Message him. Will send shortly. All right. So if it's cumulative depreciation, we want it to do what it's doing unless it's the exit month and we have decided to do the exit proceeds. So where's the main calculation? Let's start over in the far left. So the main calculation is just summing up the total cumulative depreciation. Simple. All we're doing is adding the same logic up here, and we can just copy it down. Oh, this is so much easier. I'm really going to get this down to a science after a couple more, man. Can't wait. All right, so we don't care about any of this. If C5 is equal to the exit month and global control is yes, zero it out, otherwise sum up the cumulative total depreciation expenses. In accumulated depreciation, one of the only contra assets. Oh, whoop. And hold on. We'll have to add one more little piece of string here just to clear it out after the exit month. So if this is greater than exit month, then 0. Now the annual might be a little bit more tricky, but we'll see. We will see. All right, this looks good. Only assets cash at the end with an exit. You pay off the debt. That's right. Still got owner's equity in there. Okay. Good. So that we're going to test all the different scenarios, so don't worry. And all the different things that can happen here to make sure we don't have errors, but let's try and get through the annual balance sheet first. So what did I do here? Okay, I'm using index. That's a good sign. I'm matching the value at the end of the year. That might, let's see. So these two clear. Okay, well, it balances right now. That's good. Let's go. We still have to add, and I'm going to re-pull up this. I'm pretty upset that I have to. I can't believe I undid the equipment rental logic and then saved it. It's not good. So I have to put that back in here to after the stream. But I need to pull this for our formatting on the distributions and executive summary. So this is like a cash flow, discounted cash flow analysis, and just a high level summary. So we'll pull that, and then that we only need 5 years, but it's okay. Dang it, didn't mean to do that. So this was our old distribution, or old exec. Hold on. This is taking over this. This is not as advanced. This is what we're adding. And then this is being taken over by that. We don't need these. Merge. 1, 2, 5. So I believe, what's today? Thursday? We're going to finish this tomorrow. So this week, Monday, was spent updating the three-statement model. Tuesday and Wednesday and Thursday, we've been working on this. Or Thursday, I actually took off the day from streaming. So Tuesday, Wednesday, and today. Okay, I'll format this. What? Let me unfreeze. I'll fix all this later. So executive distributions. Deleting this one. This is now distributions. And then going forward, we're definitely keeping that selector for yes, no, and exit proceeds. That's awesome. All right, this is all got to be updated with the formulas for this model, but that's okay. And then we can do the cap table internal rate of return for each entity. And no, I do have much more complex cash flow waterfalls with like preferred equity, preferred returns, IRR hurdles, which you can simply take the annual distributable cash flow, which is going to look at the total equity contributed less and or total equity contributed and total cash returned per year. And you can plug that into a waterfall model and then get your splits if you have more complexity. This is just based on a hard split where insiders get X%, and that's it's not pari passu, so it's just dependent on the valuation, how much equity share they got for their funds contributed, but it's still just X, Y%. So owners, operators get X%, investors get Y% each year, and that's it of whatever is available. And then they contribute value based on whatever the cap table is sent at. What was I going to do now? think I might be done. It's a longer stream today, hour and 40 minutes. Let's just see. Do I need anything cleaned up that I will probably forget about if I don't do it? Oh, we were just about to do the checks. Oh, hold on. Let's do the checks. So, well, no, this is good to start the stream with tomorrow, Friday. We'll be doing some checks. That's more fun. So all these will check balance sheets. We'll check annual versus monthly. Make sure that matches. We'll check across between the P&L details and the financial statements. We'll check individual distributions against total distributions. All of that stuff. Um, and then assuming everything works based on me changing the end month and the multiples and just all of this, yes and no. We'll see if the checks are zero every time. We are made in the shade, and will be ready. And I'll build the overview video of it, maybe over the weekend or Monday. So that's all I got for you today. Don't forget, check out smarthelping.com. We've got models by category, by volume, got discounts. We could do 5, 10, or all mid-level models for those prices. And note, mid-level, everything is labeled on this financial models tab at the top. If you go to it, everything is labeled as mid-level, intermediate, upper tier, or ultra. And then you can get discounts based on here, or you can buy all the templates on the site for $849. I feel like the value there is immense, but I know a lot of people aren't going to spend that much money on it. Excel sheets. So if you add up all the value here, I mean, if we just go by category, this is SaaS is 1,000. If you were to buy all the models individually, joint ventures 500, real estate 4, accounting's 830, industry specific is 2,200. HR is 530, lending debt 320. And also I have some other personal finance templates if you're looking for like retirement savings, mortgage repayment, new home saving planner, multiple loan repayment, internal rate of return, project comparison, interest rate swap, amortization for 95. And note those prices, the value of each of these templates, I believe if you're using it for what it's for, is way beyond what it's listed for. I mean, way beyond. Some of these joint venture models I've worked on, people pay $3,000-$4,000, and I'm selling them for $45 modified, obviously, and actually made more for it. And a template, when you make a template, you have to think about trying to make it useful for a lot of people. So it can't be too complex, but it's got to have enough things to make it useful. So that's all I got for you. Don't forget to subscribe to the channel, like the video. If you want to support, pay $5 a month. You could join the YouTube channel. And I've got 4 members right now: Human AI, PJ 5000, Troy, um, and Jeffrey. All right.